This self-learning video is created by Jagrat Creations. It is on single entry conversion method, hence useful to the students reading for CA Intermediate, ICWAI Executive, CS Executive, BCom, CA-IPCC. I want to solve one sum on single entry conversion method. Just observe the sum on the screen. This is the sum that I intend to solve. A trader keeps his books of accounts under single entry system. On 31st October 2015, his statement of affairs stood as follows. Statement of affairs means opening balance sheet. On liability side, you are given the balance of creditors, bills payable, outstanding expenses, and capital. Assets and furniture, fixture, stock, debtors, bills receivable, unexpired insurance means prepaid insurance, cash in hand, and at bank. Following is a summary of cash book. So this is the receipt side, this is the payment side. Opening cash 80,000. Here also the cash balance, opening balance 80,000. So 80,000 is recorded as opening balance in the respective account. So this cash balance is given in the opening balance sheet as well as it is recorded as opening balance in the balance sheet in the cash account. So all the accounting effects are given. So no need to write anywhere in this 80,000 when you try to solve the sum. Cash sales, receipt from debtors, received from bills receivable, payment to creditors, payment for bills payable, expenses paid, drawings, cash in hand and at bank at the end. Discount allowed to trade debtors and received from trade creditors amounted to 36,000 and 28,000 respectively. Bills endorsed amounted to 15,000. So bills endorsed to the creditors. So creditors account debit to bills receivable account credit. Annual fire insurance premium rupees 6,000 was paid every year on 1st of August for renewal of the policy. Furniture, fixture and fittings were subject to a depreciation of 15% per annum on diminishing balance method. You are also informed about the following balances as on 31st October 2016. Closing balance of stock, debtors, bills receivable, bills payable, outstanding expenses given to you. Trader maintains a steady gross profit ratio 10% on sales. Prepared trading and profit and loss account for the year ended on 31st October 2016 and the balance sheet as on that date. I will prepare all accounts as given to me in the opening balance sheet except this cash and bank account because it is already given to me newly prepared. So let me start preparing various accounts. See, this cash and bank account is already prepared. So this I am not going to write anywhere while solving the sum because twofold effects of it is given to you as per the double entry accounting principles. So profit and loss account, debtors account, creditors account, expense account, bills receivable, bills payable, balance sheet. So these are the various accounts that I have prepared. Now I want to strike the opening balances from the opening statement of affairs. Furniture and fixture I write in the inner column because I am required to provide depreciation thereon. Stock will go to the trading account debit side, opening stock. Debtors balance will be recorded in the debtors account, opening balance. Bills receivable balance will go to the bills receivable account, debit side, opening balance brought down. Unexpired insurance 2000 prepaid insurance. So insurance prepaid at the beginning of the year is an expense for the current year. So prepaid insurance balance will be transferred to insurance expense account. So I debit this prepaid insurance to the expense account. I am not going to write this cash in hand and cash at bank because it is already recorded as opening balance in cash and bank account. Then balance of creditors account, credit side, balance brought down. Bills payable account, credit side, balance brought down. Outstanding expenses 45,000 will be paid during the year. So this outstanding expense balance will be transferred to expense account. The entry for that outstanding expense account debit to expense account credit. Capital balance I write in the inner column, balance sheet liability side. This is how all the balances given to me in the opening statement of affairs are being considered. Now cash book. This is a receipt. So cash account is debited for all these things. So cash account debit to sales account credit, cash account debit to debtors account credit, cash account debit to bills receivable account credit. So opposite entry to the debit effect is to be given. So cash account debit, cash sales I write to the credit side of trading account. Receipt from debtors is credited to debtors account. Receipt from bills receivable is credited to bills receivable account. Cash account debit to bills receivable account credit. So these are the cash debits. Credit effects are given. Payment to trade creditors. See, cash account is, these are the payment. Cash account is credited for all these things. All these payments are credited to cash account. So credit effect is already given. For converting it to a complete double entry system, you are supposed to give debit effects. So payment to creditors, creditors account debit to cash account credit. Payment for bills payable account debit to cash account credit. Expenses paid, expense account debit to cash account credit. Drawings account debit to cash account credit. So credit effect is already given. You are supposed to give now debit effect. Just observe. Creditors account is debited, cash account is credit. Bills payable account debit. Expense account debit. Drawings are deducted from capital. Closing cash balance will appear in the closing balance sheet asset side, cash on hand and at bank. This is how cash transactions are considered. Now I am given discount allowed and discount received. Now discount allowed is an expense debited to profit and loss account, and debtors account is to be credited for discount allowed. So debtors account credit and profit and loss account debit. Discount receipt will be credited to profit and loss account, and creditors account is to be debited for that. So creditors account debit to profit and loss account credit. This is a discount that we earn when we go for payment. The concession received or discount received from the creditors at the time of payment, to that extent we are required to pay less amount to the creditors. That's why creditors account is debited and profit and loss account is credited. Bill endorsed 15,000. Creditors account debit to bills receivable account credit. Fire insurance paid 6,000 annual expense. So fire insurance premium paid 6,000 for 1st of August 15 to annual. So up to 31st of July is included in the sundry expenses. My accounting year ends on 31st of March. So 31st March to means 1st of April to 31/7/2016 is a prepayment. This is annual expenses. So 12 months amount is 6,000. How much for 4 months? That is a prepaid expense. This 2,000 insurance premium prepaid that will appear on the balance sheet asset side. So prepaid insurance account debit to expense account credit. Prepaid insurance account debit to expense account credit, because all expenses paid including insurance premium is a part of this 6,20,700. Now provide depreciation at 15%. So 1 lakh into 15%. Depreciation deducted and debited to profit and loss account. This is how given information is considered. Closing balance. Closing stock 6,50,000. Trading account credit balance sheet asset side. Trade debtors closing balance. Balance sheet asset side. Debtors account credit side closing balance 1,52,000. Same way I will write out the closing balance of bills receivable 75,000. In bills receivable account I write on the credit side, and that will appear on the balance sheet asset side, bills receivable. Then bills payable, closing balance sheet liability side, bills payable account debit side. So bills payable, this is how it gets recorded. Outstanding expense will appear on the balance sheet liability side, and the journal entry for outstanding expenses, expense account debit to outstanding expense account credit. In this sum, this expense account point is very important. Now, I have considered the information. Trader maintains a steady gross profit ratio of 10% on sales. I have got cash sales, I can find out the credit sales. Cash sales plus credit sales, I'll get total sales. I'll apply 10%, I'll get the gross profit. On the basis of that, I can find out the missing information relevant to purchases because opening stock and closing stocks are given to me. So here bills receivable account is closed first. So I'll get the total number of bills receivable received from debtors. So bills receivable account debit to debtors account credit. Normally it should be the practice of the students when the debtors account is required to be closed. Always first close bills receivable account, then close debtors account. That's a suggestion given to you. So 70,000 is credited to debtors account. Now I'll get the details of credit sales by closing debtors account. Total of credit minus total of debit. So 19,20,000 credit sales. So I got the total sales. These total sales multiplied by 10%. So I'll get the gross profit 9,30,000. It is recorded in the debit side of trading account and credit side of profit and loss account. So this is how it got recorded. Now, opening stock, closing stock, sales, gross profit, missing item may be purchases, and the accounts yet to be closed are bills payable account and trade creditors account. So here I close, first of all, trading account, and I find missing information is the purchases, and that is trading account is debited and creditors account is credited for these purchases. Now I close this bills payable account. So bills payable accepted during the year and given to creditors. So creditors account debit to bills payable account credit. This is also missing information. Now I can find out the closing balance of creditors account that will go to the balance sheet. This is how closing balance of creditors is found out and it is transferred to the liability side of balance sheet. Now expense account is yet to be closed. So total of debit minus total of credit, that is the expense for the current year that is to be debited to profit and loss account. So 5,80,700 is debited to profit and loss account. This is our expense. Considering all outstanding prepayment of expenses, opening and closing balance is considered in this account. That's an important point. So 5,80,700 is the expenses debited to trading and profit and loss account. Now find out the gross profit. So total of credit minus total of debit, we get the net profit. Gross profit plus discount received minus expenses, we get the net profit. Net profit is added to capital. Net profit is added to capital. So this is the closing capital balance. Now you can tally the balance sheet. Assets and liabilities side total should agree. So 10,91,300. This is the total of liability side. This is the total of asset side. This is how this sum is solved here before you. The important point of this sum is this expense account that is being prepared in the expenses for the current year found out 5,80,700 is an important point. Another important point is we have found out the purchases as a missing item from trading account on the basis of rate of gross profit given to us in the sum. That is also another important point. So just focus on these 2 points. I have tried to explain you this sum. I feel that you have followed all these things. Thanks to all of you.